Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 102A, and today's date is June 20th, 2016, and the title of the episode is BRICS Banks Will Issue Bonds in Members' Currencies Bypassing the Dollar. Let's get into the economic collapse financial news. Now, we have had a crazy day on the market, coming out of the gates after the weekend since the market's been down quite a bit. And they're pushing the idea that there's going to be no Brexit whatsoever. We saw the market being pushed up. At one point, it was like 200 plus points. It has come down since then. We've also seen gold drop a little bit, but not that much. It is very close to the $1,300 mark. And we can see at this point, they are getting very, very nervous, and they're trying to make their case why the referendum should be completely called off because what happened to the MP, Joe Cox. And we know that this was a false flag. It just happened at the exact time they needed this. And every time you see something like this, everyone should suspect foul play. And we see right now that the elite, the central bankers, they're very worried because if the EU should lose the UK, there's going to be a chain reaction because of the other countries are going to look at this and say, you know something, do we really need to be part of this system where the ruling bodies aren't even elected, where we have no say in what they do? And this is their biggest fear. Their biggest fear is the people finding out what this is all about. And this is why they're pushing so hard to derail this. Now, here in the United States, we see the economy, it is sinking fast. It is not getting better whatsoever. We see Caterpillar right now. It is a complete disaster. We see U.S. retail sales. They have once again started to deteriorate dramatically. Remember, back in April, they slid by 11%. They declined. In May, they declined by 12%. And right now, we are seeing this continually happening. Everything is continually declining. Now, out in the Asian Pacific region, we see that there was a drop of 13% in May. So when we look at Caterpillar right now, 42 months of consecutive declining retail sales. This has never happened in the company's history. How possibly can we be in a recovery and the economy doing well? Because we need to think about this. Back during the Great Recession, we had 19 months of declining sales. We're at 42 months of declining sales. I think we're past this Great Recession mark right now. We're in a total depression collapse. Now, Obama is out there, and he is continually telling us that the economy is absolutely doing fine. Actually, earlier this month in Indiana, he accused his critics of ignoring the facts and purporting myths about his economic record. Really? So when we look at his economic record, what do we find? Well, this is what they predicted during his presidency, going back to 2010. He said GDP was going to grow back in 2010 by 2.53%. GDP grew by 2%, completely off. 2011, they said, well, the economy's doing so well, we're going to have a GDP of 3.8%. The GDP came in at 1.6%. In 2012, they said, the economy, the unemployment's coming down, retail's expanding, housing's expanding, everything looks fantastic, manufacturing is incredible. We're going to have a GDP of 4%. GDP came in 2.22%. In 2013, they said the same thing, 4%, came in at 1.49%. 2014, 2.43%. They were saying 4% once again. Going to 2015, we're seeing the same exact thing over and over. And of course, 2016, it is a complete disaster. Actually, if you strip out Obamacare from all of this, guess what happens? GDP goes into negative territory. If you go back in time and you remove their manipulated calculations where they included research and development since 1929, recalculated the entire GDP up to the present day, we are in the negative range. So his record is really not that good. Actually, it looks like he's out there peddling the fiction. Now, Obamacare, when of course he pushed this out, he said everyone was going to save on health care. Everyone's going to save about $2,500 per family. And what have we seen? We've seen insurance premiums increase by 30 to 50%. Business owners right now, they're hiring fewer people. And they're trying to keep their employees under the 50 employee mark. And they're reducing hours. This is not helping the job market. Regulations. Well, what we're seeing right now is, according to the Heritage Foundation study, more than $22 billion per year in new regulatory costs were imposed on Americans, costing Americans nearly $100 billion annually under Obama's presidency. Taxes. Obama has raised taxes on investment income by nearly 60%, raising capital gains from 15 to 24%, and pushed the top marginal rate, the tax on small business owners, to 40%. The U.S. right now has the highest business tax rate in the world. And you know what this does? It causes the companies to say, you know what? Let's move out of the United States. Let's take our jobs and move them to a different place where we're not taxed so high. So when we look at his record, it is not good whatsoever. Actually, when we look at this, we can see the economy has gone absolutely nowhere. It's gotten a lot worse. The manipulation makes it seem like things have gotten better, but when we look at the real facts, we are nowhere near any type of recovery. We're going in the opposite direction, and this is what always happens when you listen to these government officials, these government employees. Whatever they say, it is always the opposite. The Baltic Index has dropped another 5 points. We're down to 582. And we do have proof that we are in the biggest bubble of all time. Think about this for a second. The median price to sales ratio on the S&P 500 companies is now over 2. Well, it doesn't sound like much. What does that really mean? Well, think about this. During the tech bubble, we were at 1.6. During the housing bubble of the Great Recession, we were at 1.75. Put it another way, the market has never been more expensive relative to the money corporations receive in sales. This is a complete disaster. It looks absolutely awful when you look at the real data. The hardcore data, this economy is failing, and it's failing hard. Now, very interestingly, Obama is out there, and he is saying that this is the time to invest in the United States. Put your money in the stock market. You have nothing to lose. Well, we need to go back in time a little bit. Back in 2014, when they were putting the pressure on Russia, which they're continually doing by lowering the oil prices with the sanctions, they said, listen, this is not the time to invest in Russia. Their economy is failing. They said this back in 2014. Their market is going to crash any minute. And they said this when the Russian market was at 12.75. That's when they announced the market in Russia is going to crash. Do not invest in Russia. The market is up to 1902. Now the president is out there, and he's saying that this is the time to invest in the United States. And the S&P is at all-time highs, which tells us that whatever they say, it's going to be the opposite. That means they're trying to get everyone in at this point at the height of the market so they can make the elite, whoever is doing this, as much as they possibly can and get out of the market by selling the investments to retail investors. They want to get out right now because we are at the top and it's about to crash. This is definitely what's happening right now. Because whatever they say, if you look at all the evidence, it's always the opposite. And if they're telling you to get into the market right now, I'm telling you right now, this market, it's getting ready to come down, and it's going to come down hard. Now, the BRICS Bank, the new development bank, the NDB, which is an infrastructure-focused lender establishment by the BRICS, they're planning to issue debt in local currencies of its 5 member countries. And they're saying that their first debt, they're going to issue all of it in their local currencies. Clearly, the demand is for the ruble-based funding in Russia. Companies or government do not want to take an exchange risk. They said the bank has yet to determine the size of the ruble bond and may tap the market in the next 2 quarters, targeting pension funds and banks as key investors. It is also studying the possibility of issuing local bonds in South Africa. So we can see they're moving forward by bypassing the dollar. We see that they don't want to have anything to do with the dollar at this point. And there's a reason for this, because when we look at the entire situation, we see that this economy, and there are many people coming out at this point saying this economy is not going to make it through the fall, maybe early 2017, depending on how this whole thing falls apart. But we're starting to see that everything that the government employees have been telling us, all their predictions on how well the economy was going to be doing, all turned out to be false. How they explained how other economies around the world, how they weren't going to do well, that turned out to be false. So when we look at this entire situation, it tells us one thing and one thing only, that whatever they're saying now about the U.S. economy, it is the complete opposite. And if they're telling you that everything is fine to get into the market, don't worry about it. Don't invest in gold and silver. The dollar is strong. It's backed by the petrodollar. We know we have a major problem. And this problem is starting to accelerate because we're starting to see that all the economic indicators and the real hard facts, and I'm not talking about the manipulated numbers they keep throwing at us. I'm talking about real facts, things you can look around, things you can touch, things you can talk to one another and say, listen, this whole strip mall used to have nice stores in it. It's completely empty. Housing, it's continually coming down. Actually, I was talking to a relative who is living in the North Carolina area, lived in the area for about 7 years or so, and says, I wanted to sell, but my place has dropped in value by $20,000 or so. And actually, when he puts it up for sale, it's probably going to be a lot worse than that. But when we look around the area, and I look around all over the place, we see that this is starting to accelerate. People are starting to take notice. They don't understand why this is happening because they're hearing from the corporate media that housing prices are continually going up. Everything is fantastic. Unemployment is very low. And the confusion comes in with why is this happening and why is the corporate media and the government telling me something completely different? And eventually what's going to happen in a lot of places is going to be too late, where everything starts to crash around them. And when it does start to crash around them, they're not going to understand what's going on. And people are going to be in shock when this happens. And this is why I'm telling everyone, and I've been telling people for a very long time, we've been tracking this day after day after day. So it is not a surprise. It doesn't come out of left field that we know exactly what's been going on, that this economy is deteriorating, it's declining. We've passed the recession point. We're in a depression collapse scenario. And all of a sudden, when that big boom comes, the whole thing is going to come down in a split second. And this is why you need to be prepared, because it's going to be very tough, just like Venezuela, just like Argentina, just like Greece, where it's going to be very difficult to get the everyday supplies. Just remember back to when we were coming off the gold standard going on to the petrodollar system. It was very difficult to get fuel. Now take that today, where we have all this debt. The dollar is at its end game. The credit market's going to freeze up. Deliveries are going to freeze up, and it's going to be very difficult for everyone. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.